Stefan Rust, CEO of Truflation.
Let's hope this stays. Hello, hello, hello. Hey, everybody. Hello, Toronto. So I'm the founder and CEO of Truflation, and today is Inflation Tuesday. So today the US announced their inflation number, 2.3%, which is exactly what Truflation predicted, given that we stream inflation data every single day. So what is it, right? Why did we set this up? Truflation today is about 100 million RWA data points, real world events on a blockchain. So anybody building applications can actually access these data points and build indexes using all of the data points. They're in SQL using a consensus algorithm, Byzantine fault tolerant. And so that's what we put on chain, and ultimately all of these real world events are verified. Why did we set this up? We basically set this up because this guy told us that inflation was only going to be transitory. And if we remember, when tariffs came back, inflation was going to be transitory again. And then he changed the wording very quickly. But we didn't believe that inflation was going to be transitory, especially if you print $11 trillion in new world money. So what did we do? We looked under the carpet and we saw that the way the governments calculate inflation, it's manually. They have people going to the grocery stores tracking price data. They don't use APIs, they don't do it in real time, and they do it once a month. And then they go back, oh shit, we got that wrong. Excuse my language. We got that wrong. And then we go back and we change the data. So we edit it. And we felt that that is a very archaic way in this day and age to be doing and tracking the movement of prices. So what do? We standardized categories and we built different weightings. So we now do this in 4 different countries, not yet Canada, maybe Canada sometime soon. But right now, the weighting never changes. Sorry, the weighting always changes, the category doesn't change. And so that's what we built around Truflation. So here you can see we have food and alcoholic, non-alcoholic beverages. That's 21%. So if you look at that, that's in Argentina. And 8.8% is only spent on rent. In the US, it's 23% on rent and maybe 16% on food. But the categories, again, don't change, the weightings change. And we now do this in the UK and in India as well. So all of these data sets are available to any of you developers building exchanges, prediction markets, dApps, lending protocols, whatever. You can leverage the indexes created on Truflation, and you can leverage all of the data to build anything you want around that. So here you go. Here are the 4 different indexes. You can see them. You see the breakdown, all of the 12 different categories. You don't only see the 12 categories, you see the subcategories within the categories. So you get more and more granular. And if you're a developer, use the SDK, you actually see the individual data points from the individual suppliers. And so we have over some 100+ different data suppliers, real-time data suppliers, from big names that are whitelisted aggregators to independent, sort of companies doing trading, exchanges, where we get 24/7 real estate pricing, for example. All of this is our data set that we have composed and made available to any of you developers. And we actually have built out indexes leveraging that data. So we today give you a 45-day lead time on the information that you get before Inflation Tuesdays. So if today is Inflation Tuesday, you will have known 45 days ago what the government was going to say. So we give you that advantage if you track and leverage the real-time data advantage. And that's what most of the users in the traditional finance world do. Look, our goal is to make the blockchain rails as attractive to traditional money, so we're attracting new money into the crypto asset and crypto land versus having it extracted out of crypto land. So we want to see lots of onboarding and no off-ramping. That's sort of our goal. And how do we make that possible? We speak to the people that have a lot of liquidity in the traditional world and help them come on and find products that they can trade and love trading in the on-chain world. So you can see here, by the way, our predictability. We are always on the money. We're better than most others in the market today. But where do we want to go? People want to see into the future. They don't want to know what's happening now, and let alone want to know what happened yesterday. The government will tell you what happened yesterday. Truflation will tell you what's happening right now. But tomorrow, Truflation will help you have a visibility into the future. That's really what we want to try and do, and that's what we're bringing to you. How are we doing that? A large portion of funding and capital is in bonds, government-issued bonds. And so these are 10-year long-term bonds, so you're lending the government money for 10-year bonds, and they trade on marketplaces. And the trading moves up and down, which is what's referred to as the yield curve. So with Truflation, we're seeing a lot of our customers start using the data to then be able to predict the yield associated with 10-year bonds. We're seeing pools and currency fluctuation associated with inflation or truflation. So again, you get a leading economic indicator as to where markets are going and how you can leverage truflation to be able to identify trends and shifts in how currencies are going to fluctuate. In this case, especially the dollar, but also the most favored currency in crypto land, the Bitcoin. So you can actually trace movements in Bitcoin. So we saw this uptick that just came now ahead of the curve. You would have seen it in Truflation as trends started to shift on Truflation. So that's why we've built out Truflation to provide you with believable statistics in these unbelievable times, or in these fluctuating times. We give you the real data sets. And that was the presentation. And I'm 4 minutes early. How about that? Any questions? We are doing employment data, so we are working on employment data. One of the biggest areas of innovation that we can really drive disruption is employment data. So the employment data, again, by the government, is very old, it's lagging. We have 6 different suppliers on data sets, and so we're working together with a very reputable institution to actually bring employment data on Employment Fridays to the market. And so if you know who actually speaks about Employment Fridays, you might know who we're working with. But yeah, employment data, we're bringing CPE. So there are 2 metrics that really matter in inflation. One is the consumer price index, which is the price of products that you buy on a day-to-day basis. And that's the CPI. The other way around is the PCE. And what the PCE does is track the cost increase or decrease on your spending. So how are you spending your money, and where is that money going, and what is the cost of goods associated with your spending? Not the cost of goods, but how is your spending changing over time? And so that's another metric that we're going to bring out very soon. Yeah? The Truflation in America right now is 1.6%, according to Truflation. I would go online and show you. And by the way, everything you see on Truflation.com, you have linked to an explorer. So you can actually go on the Block Explorer and see all the data providers and the weighting, the breakdowns, the calculations, all verified by 6 different node operators today. And why we only have 6 is because the speed and frequency at which these need to get confirmed. The more node operators you have, the faster the network needs to be. And so that's one question, the Truflation. The weighting, how do we do the weighting? So there are a number of different sources that we use. We actually use census-based data. And we have, on the one hand, on the website, we have a calculator. Truflation.com/calculator, where you can calculate your personal inflation. And so we have over 200,000 submissions, roughly a quarter of people submitting where they're spending money. I mean, realistically, 200,000, you may take, 50% of those are accurate and reliable that you can work with, but that is more than the government 1,000 panel survey. So, and then we add in their credit card data, so we try to track where credit card spendings are happening based on the 5,000 credit card categories that you have out there, and then other assets that we log in based on government as well as private sourcing for that data set. Sorry?
How do you check your accuracy?
How do we verify the accuracy? I mean, we don't check our own accuracy. We let the customers and the users check our accuracy. So we have very big financial institutions that subscribe to the data sets, and they battle test us every single month. What they use the data for, we have 2 sets of customers. One is a group of customers in the traditional world that like to use the 45-day leading economic indicator to then be able to predict where the government numbers is coming out. And they measure us all the time. They battle test us. We get on calls once a month, if not more, and then they verify and they battle test us. And also, we can see the trends. How accurate are we on the trending? We have unique indexes, like the eggflation. You can go to Truflation.com, track eggs, and if that's an accurate reflection of what you're experiencing when you go to the supermarket, then that is another accurate reflection. And everybody has come back to us and said, that's exactly what I paid when I went to the store, right? So those are sort of ways that we can track it. The other customer base that we have, which is actually more interesting, is customers in the Web3 world. They don't give a rat's ass about government statistics. They want Truflation. They only work with the Truflation numbers. And that's the exciting moment where all of a sudden we're seeing new lending protocols, we're seeing new prediction markets use blockchain on-chain private verifiable data sets. And that is really exciting. So we're seeing a new emergence of markets that are growing. So we don't rely anymore on inflation-protected securities that are in the magnitude of 5.5 trillion. We are now building and developing competing products against that market set, which is super exciting, and that's where we want to see more growth. Last question, I think. I can't. Sorry? Are you American or Canadian? I am neither. I'm Swiss. Yes. So we have all of the data sets. They come from the US. We have Argentinian data. We have Indian data from India. And then we have the UK. We're looking at other markets. We want to go into Japan, China, Brazil, and maybe Canada. We're looking at different economies. Each market comes with a significant investment. We need to resource it, we need to acquire the data sets, we need to integrate the data sets, and we need to ensure those data sets are composable. We do layer on top of these data sets global data sets. So global shipping information, global weather data, global, I don't know, all sorts of other data sets, commodity data, agriculture pricing data, all of those we add. Why are they important? Because they influence the future of pricing on the products that we buy on shelf. And so that's why we're really sort of trying to get more into the predictability. And the interesting market, the next market we really want to go after is weather. Why is weather so important? Weather is a leading indicator for energy prices. And energy prices are a huge futures market. So with weather, you can build energy-related futures contracts. That industry vertical alone is a $25 billion industry. That's where we want to work with builders to identify opportunities associated with temperature goes hot, we need air conditioning. Air conditioning, I need energy. Cost of energy, demand up. So price of energy go up. How do I hedge myself against that? And those are products that we're looking to build out in the future. Thank you all very much. Hope you enjoyed it and have a great show, and we'll see you guys later.